please welcome Todd Crosland.
Thank you, Bryce. Thank you, Bryce. Appreciate it. Well, pleasure to be here, and we thank you for having Seed Equity here today. And it's always great to visit with like-minded individuals who are looking at alternatives and growing and financing their companies. Just a little background on myself. I graduated from the University of Utah many years ago, and for better or worse, I've never applied for a job. So I started my first company out of the University of Utah, and I've pretty much done that since I graduated in 1985. And so I've been an entrepreneur at heart, and sometimes that's been really great, and sometimes you can check with my wife, it hasn't been. So there's ups and downs that you see, but more often than not, it's been a great experience for me and my family, and we've enjoyed it. I've had a diverse background with companies that I've worked with. My wife and I bought a steel manufacturing company about 20 years ago. It's an 80-year-old business. And so have diverse interests in companies that I've started and funded and grown. As Bryce mentioned, back in 2001, I started a company called Interbank FX. We were a futures and commission merchant registered with the CFTC and the National Futures Association. So we were a futures and commodities broker, and we grew the company to, we onboarded about 250,000 customers in 140 countries. And we had offices in Salt Lake City was our headquarters, and we had customer service that spoke about 20 languages, which Salt Lake is has a great resource for language speakers, and so that was a great help for us. But we had offices in Beijing, Sydney, Seoul, Hong Kong, London, and the U.S. And then we grew the company, and we sold it at the end of 2011. And after we sold the business, back in, this was December of 2011, I looked at what I wanted to do next and took some time off. And in the spring of 2012, and you've heard a lot about that during this conference, the Jobs Act was signed by President Obama. And with lots of fanfare, it was signed, lots of press. And so I looked at that, and with my brokerage experience with my last company, I thought this would be something I'd really like to be involved in. Where I've invested in startups and started my own companies and sold businesses, I thought, why don't I get involved in this business and look at forming my own broker dealer, and then registering with the SEC and FINRA. So about a year later, we filed with the SEC and FINRA to become a broker dealer, and it was about an 18-month process to get registered as a broker. And we have an online investing platform that we had to have approved as well from FINRA. So our legal counsel had me put in this disclaimer. Whenever he's done reading it, raise your hand. So I told you a little bit about my background. As I mentioned, we grew the company to about 250,000 customers. We onboarded in 142 countries. And our customers were trading about upwards of $80 billion a month in transactions with our firm. And if you look at I thought it would be important to talk about the company history here that goes along with this conference. As I mentioned, 2012, the Jobs Act is signed. Then there were some key components that have taken place over the last 4 years. And the first being Title II of the Jobs Act was passed. And that allowed for general solicitation for companies under Rule 506C. And so that was really one of the most significant parts of the new law that passed as far as it relates to our company, Seed Equity. And then we launched the company formally in the fall of 2014. And since then, in the last little over a year, we raised capital for 8 different companies. And also, to our surprise, Title III of the Jobs Act was finally approved by the SEC and FINRA on October 30th of 2015, and you'll hear more about that later in the day, but that law will go into effect May 16th of next month. So as we look at what Seed Equity looks to do, there's a funding gap that we're trying to fill with our customers and our investors. And as we find entrepreneurs that are looking for funding, they have a friends and family commitment that they help for an entrepreneur or startup. They help start their business and grow. And then, before they have significant traction where they can attract, large venture capital firms, we think that there's a gap that exists. And this is really the area that Seed Equity Ventures is trying to fill for entrepreneurs. And we're trying to find entrepreneurs and companies. It can't be just an idea, but we're looking for companies that they have a minimum viable product and they've launched their product and in the market, and they're in the marketplace, and they're growing traction through adding new customers. They don't necessarily have to have revenue yet, but they have to have some validation in the marketplace. So it would still be probably too early for large venture capital firms, and they've outgrown the friends and family financing. So that's the area that we try to provide help for entrepreneurs. As you look at how we find companies, we have connections and relationships with several venture capital firms. They find lots of interesting companies and interesting founders. Many times those companies are too small or not enough traction for them yet, and so we get referred a lot of companies from other venture firms that we work with over the years. And then they come through our website as well. We've had this last year something over 500 companies have come through Seed Equity Ventures for funding. And we've narrowed that down to we're trying to find entrepreneurs that have had some success in their past, and then a product or service that's gaining traction in the marketplace. I'll talk about a couple of companies. This company here, Consensus, if you're from Utah County, you may have heard of a company called DemoChimp. And so that was a company that we participated in their seed round back in 2014 and also in the spring of 2015. And they just raised a Series A round of $4.2 million, and they've changed their name from DemoChimp to Consensus. So it's a great company, great founder, Garen Hess from American Fork, and they're growing very well with great revenues. Another company that we helped with their seed round was Nimble Schedule. It's a company from Carlsbad, California, and they just closed a Series A round with Seek Limited. It's a $4 billion public company in Australia that's the largest jobs board in the world. And so we're really happy about that investment. It really validates what we did in the seed round for the company. Another company that we invested in, Micro Benefits, we invested in, it was a convertible note round, a bridge round for them, and they just closed a $10 million funding Series C round with another public company. So we're excited for one to find these entrepreneurs, find the companies, but then it's kind of like being a parent. After we've helped them through their seed funding, if they can go on to raise $4, $5, or $10 million in their Series A or B rounds, that's really exciting for us as investors, and also we're happy for our investors that came in on the seed rounds. So a little bit about our process at Seed Equity. So we, as I mentioned, we've looked at about 500 companies that have come through. We'll go through the company as they present their pitch. We do a filter at that point, and if it's an industry that we know about and are interested in, and we really like the disruptive nature of their service or technology, then we'll schedule a call with the founder. Sometimes we can meet with them in person. We have a small office in San Francisco, in Los Angeles, and then in Salt Lake, and then we go from there. Then if they get through that next phase and we felt good about meeting the founder and hearing their vision, and then we take a step further and we do a background check on the officers, directors, and 20% shareholders. So that's one of the requirements for the offerings that we deal in as a broker-dealer, is that we have to do what's called a bad actors check. And so to protect ourselves and also investors, we do a background check on the individuals. And then if it gets through, the background check, and we have an escrow account at U.S. Bank that's set up for the transaction, and then we'll publish the transaction to our investors on our website, and then it depends on the time. Some deals have taken as fast as 72 hours, and some have taken 3 or 4 months to close. So what's interesting that happened in 2012 with the passing of the Jobs Act is currently there's maybe 300,000 active angel investors in the U.S. And with the passing of the Jobs Act, and particularly with Title III that goes live on May 16th next month, the market for capital is going to grow exponentially. So you're going to go from 300,000 accredited investors in the U.S. to potentially millions and millions of investors that could now participate in these early stage private offerings. These are just some of the figures that we've pulled out from some of the publications that are out there. One came from the World Bank, and they talks about the potential size of equity crowdfunding and the crowdfunding market in general. And oops. So if I had glasses, I could read this, but this talks about the number of households worldwide that could participate in crowdfunding. And there's been some estimates that have come out from the World Bank that by 2025, global crowdfunding could reach $300 billion. And then there's another research study that was done that 97% of Americans that were surveyed noted that they would be interested in investing in startups. So really next month in May will be the first time that the regular investors could invest in these early stage companies. So this slide talks about the market opportunity and key trends. So the blue line is crowdfunding, and we have angel investors that's been quite steady here, but starting back in 2010, you can see the line for crowdfunding has been exceeding what angel investing is, and now with the passing of Title III of the Jobs Act, that blue line could continue to go in an upward projection there. So as I mentioned on an earlier slide, the Jobs Act was approved in 2012. In 2013, 506C for general solicitation was passed. And then in 2015, March, a Reg A Plus was passed. I think we'll be learning a little bit more about that this afternoon as well. And then October 30th of last year, Title III of the Jobs Act was finally completed. So I was asked to speak specifically about 506C today, which was a pretty revolutionary change in the securities industry in how capital is raised for companies. So this slide here talks about the different types of offerings, the different types of exempt offerings under the Securities and Exchange Commission and FINRA rules. There's a 506 B, which has certain rules and regulations that are listed here. Then there's the 506C that allows for general solicitation. Under 506B, there can't be any general solicitation. It has to be a private offering. And then, as we know, with Title III, the crowdfunding rule that becomes live on May 16th, that will be open similar to a 506C, where they'll be open on websites and on the marketplace. So this is just an example of like a 506B offering. There really can't be any information on the offering available to the public. So it's basically a private offering. If you go to a 506C offering, this can be available for public consumption. So on our platform, Seed Equity, it's seedequity.com. If you go to the platform, and if it's a 506C offering, you can see, the name of the company, where they're from, a little bit about the company, what their target is, how much they want to raise. As I mentioned, this was a company that they completed a Series A transaction with this large public company out of Australia. But on a 506C offering, you can not only, get an idea about the company here, the offering, but you can log in on the website and you can watch a video on the company. Then there's going to be an executive summary, talks about the investment goal, pre-money valuation, is it common stock or a convertible note? So you get all the details there. So on our platform, investors, they can like and follow companies and invest in companies. And so it's interactive. So if you have a question for an entrepreneur, you can log in and you can ask them that question. The community can also ask questions and talk about the offering, and kind of from the wisdom of the crowd, that can help them, with their decision on whether they want to invest or not. So this is just more information on Nimble's schedule. It's got a recent press release they had with Epson. Talks about, the founders. And as you can see here, if they're an officer, director, or 20% shareholder in the company, we have to do a background check on the company. And so we just note that the background check's been completed on these individuals. And this is the founder and the CEO. And then there's a data room on the site. So for investors that have registered with our broker-dealer, they can log in and they can view a data room, and they can view financials, offering documents, projections. If there's patents, they can view all the information in the data room. And then here we talked about Title III of the Crowdfunding Act that comes live next month, that will really, it will further expand the opportunity for entrepreneurs on how they can raise capital. So I thought I could open up the rest of the time and answer any questions that you might have, because this might be foreign. This might be foreign to many of you, and I'd be happy to answer any questions if you're looking at either starting a company, raising money for a company, or investing in a company.
Okay, so I have a mic out here. We can go ahead and have a question over here, right? Where was it? Right here. Okay.
Paul O'Connor, I'm from Ireland. I'm a software developer and ukulele player.
Yes.
Could you just tell us what the new rules are for 506Cs? Are there certain limits or no limits, or how does that work? Like how much a person can invest, or if they're a non-accredited investor?
So for 506C, that's only available for accredited investors. And there's really no limits for the accredited investors. But as the broker-dealer, we'll do a suitability checklist for an investor to make sure that, one, they have the sophistication and the ability to shoulder any losses that could come from the investment. So it's a suitability process that we go through as the broker-dealer, but there aren't restrictions on an individual or firm under 506C from investing in the company.
Okay, do we have another question? Right here in the back.
I may have missed this, but how do you decide which companies are allowed to raise money on seed equity?
So I had the slide, and it's really a process. So there's three of us on, call it the investment committee. We'll get 1 to 2 pitches a day that come through. We'll do an initial screening on how far along the company is. We get some pitches that are, I'm working at Fidelity Investments. If you give me $500,000, I'll quit my job and I'll try and start this company. And so you need to have crossed the Rubicon, in my opinion. So you have to have some of your own investment time into the project, and we really so it's a fun business because we get to talk to so many entrepreneurs, and there's always like an aha moment. It's like, this is an amazing company. I think they really got something, and we should look at helping them and backing them. So the combination would be from their idea, do they have skin in the game? Then we'll look at the founders, and does this person have experience or success in their past that could prove to a future success with this company? And so we look at that, and we've had some founders that have had multiple exits with other startups that they founded, so they kind of know the drill. They know how to report back to investors monthly after we've closed the offering. So it comes down to a gut feeling, I would say. But if they've got if they've had some good experience in the past, it's a differentiated product or service, and they have traction in the marketplace. And then if we think there's a big enough market to make a difference. We also see companies that are like interesting, good companies, but it might be something that there's 2 or 3 of them that they just run this forever, and it's a lifestyle company. So we try to find something that we could have an exit for our investors down the road.
Okay, we have a question, Todd, over here on this side, stage right.
So my question is how are you going to deal with the scale of the problem? So a lot of these platforms, they run into an issue where as you grow, and as you have a number of companies that you're representing, that basically, so like Kickstarter, as a small entrepreneur, you get lost in Kickstarter because how do you differentiate yourself from everybody else? So how are you going to deal with the issue of being able to scale this so that you can act, so that companies that are really worth something can be found within your platform? And that's basically it.
So, depending on the type of offering it is, so a 506c offering, we have we have a little over 10,000 registered members, investors, and entrepreneurs on our platform now, from over 135 countries. And as we bring a company on the platform, we'll share information on that company with now over 10,000. In the last year, we've added about 10,000 new members. So we'll share the information with those people, and it won't be like, so there would be hundreds, if not thousands, of deals on Kickstarter. We wouldn't see that we would ever approach that. Maybe up to a dozen deals at the most. Yeah.
All right, Todd, I think we have time for just one last question.
Hi, Barbara Pioli with the Wasatch Cooperative Market, and I'm wondering if your company's ever been involved with funding cooperative businesses.
We haven't. They've typically, almost all of them have been Delaware C Corps. And I think it's important, the type of corporate structure that we want to deal with. If this company is going to go on and do a Series A or a B round with the large VCs, around the world, there's kind of a template that they need to follow as far as their corporate structure and how they generate their profits. So while that might be interesting, as far as the specific area that we're dealing with, the cooperative probably wouldn't work for us.
I think we're at time. I know you guys have questions. Apologize for that. We've got to keep to our schedule. Todd, thank you for being here. Everybody give him a round of applause.